Hi, traders. Welcome to Friday. It's the 26th of September. As I said earlier in the week, many people will be wrapping up their monthly account, and indeed, some will be wrapping up their quarterly account as well. Obviously, September doesn't end until next Tuesday, but as I know, many fellow traders will certainly be wrapping up the month today as well. So maybe a bit more volatility later on. 10 minutes time, we've got the key. Certainly, as far as the Fed are concerned, the FOMC and the members of the Federal Open Market Committee indicator for inflation in the United States, the PCE price index. Remember, yesterday we had that really strong set of data out of the US, durable goods, GDP at 3.8%, much stronger than expected. We had that move down again in the claims numbers, the weekly claims. Came to in at an 8-9 week low yesterday. So see what this PCE number is looking like. Personal spending will be interesting. We had that personal expenditure yesterday is also really interesting data. This, so the Fed put a lot of weight on this number. Remember, they're not meeting now till the end of October, so there's another. I think actually the next meeting, the next core PCE number comes out before their. Sorry, it's the last one before their next meeting, basically, which is still looking like a definite 25 basis point for this October meeting. It's just the December meeting now seems to have perhaps wobbled a wee bit. That was looking fairly permanent. We'll have a look at that data, see how the number, how it's been adjusted, if this number comes in much different to what's expected. So 2.9% is the annualized number, 2.9% here for the core, 2.7 for the headline number, and 0.2 of 1% for the monthly number. So let's have a look at what that looks like, I say, in 10 minutes' time. And then later on this afternoon, I won't be around for that, but later on this afternoon, there's the key University of Michigan, their inflation and consumer sentiment expectations. Remember, it was the soft data like this University of Michigan data that started to fall off a cliff about the frenzy around the frenzy of the tariffs back in April. It seems to be turning round. So the hard data never got as weak as the. Sorry, I'm shouting a bit, aren't I? The hard data never got as weak as the soft data suggested so far. Obviously, the pessimists are saying yes, it will. Obviously, President yesterday very bullish again about inflation not being around. He was bigging up at his press conference. Not really a press conference. Some of the benign questions he gets asked, it's just like a PR exercise. And it's really not cross-examining at all. It's just everybody sucking up in the White House to the boss. But anyway, yesterday, he continued the mantra about inflation not being around, and if rates should be cut by at least 100 basis points, 150 basis points now. The Fed isn't going to do anything like that. Stephen Mirren, yesterday's man on the Fed, continued to talk about 250 basis points cut as well. He's in isolation at the moment, but he can't say anything else given his position within the administration, although it's supposed to be Chinese walls and all the rest of it. But clearly, he's Trump's man on the Fed, and they're not going to move that quickly. Obviously, there's a danger. Many are saying they're getting left behind, but we'll see. We'll see what the data continues to look like. They're saying they're still data dependent. Obviously, they've been caught out in the past with their pronunciations about the temporary nature of inflation. That didn't seem to be the case last time, and let's see if they're going to be what area they're going to be in this time. But anyway, that's the data, I say, coming out in 6 minutes. As far as the market's concerned, if we just go to the stock markets were down yesterday. Yeah, we were off 0.5%, 6,004. The S&P closed yesterday. It's the longest losing streak in over a month. The Nasdaq was down 0.5 of 1%, and the Dow was down 0.38 of 1%. yesterday, despite that raft of good data. Because of that raft of good data, this morning we have moved higher. Nasdaq has moved up. This is the date. Whoops, it's the hourly chart today. So we moved down last night, yesterday, say 0.5%, and then we've moved sort of sideways actions really today, ahead of the cash out. That's the Nasdaq. The FTSE, actually, let's do the American ones first. The Dow, 46,100 here, up in the last hour and drifting high above the 20-hour moving averages. There's a 7 o'clock. There's a European Open, so we've been drifting higher. And the more important S&P, 6,115 here, so literally 10 points above where the cash market closed yesterday. Nothing to get too excited about so far today. This is the main data of the day. Whoops, sorry, let me just move me down a wee bit. Here we are. Let's see if there's anybody here. So, guys, obviously, if there's anything you want to look at in particular, let me know, and we'll analyze that together. This is the thanks to the vagrancies of Trade Locker. This is the only platform. This is the only template that's staying around. The others have all dropped out every time I've redone them, so I'm not bothering doing them. So this is the Bollinger Band and the stochastic. This is a mean reverting strategy, as opposed to, we can use it as a trend following strategy as well, but it's principally a mean reverting strategy using a touch of the outside of the Bollinger Band and a cross of the K and the D line on the stochastic to generate an entry on exit of your trade. So here, there's this is a touch of the outside of the Bollinger Band. So here at this point on this time frame, the hourly here, we're looking to go long on a rejection, but as you can see, the price continues to move down. That's would have confirmed an entry here. So you would have bought this right at the bottom there, and it's immediately gone back, but it's gone back. Depends how low your stop loss was. So that's a buy there at 4 o'clock yesterday, and it probably would have stopped you out. I probably wouldn't have had the stop loss. Oh, maybe. I wonder. I probably would have had. So if I'd been trading that would have been buy there. You can see the cross of the K and the D line. It's moved up. First target is the midpoint of the Bollinger Band, the midline. It didn't get there initially. It's finally got there, but we may have been stopped out. Would have made my stop loss all the way back down there? I'm not sure, to be honest, if I'd taken that on the hourly basis, but probably would have been halfway between the two. I would have gone up higher time frame. If I got to higher time frame, see where if I'd been trading, where would so we were on this candle here, wasn't it? Yeah, I probably would have been stopped out in all honesty in that hourly time frame there if I was trading that on the hourly. But anyway, you can see it moved up to the target eventually this morning, but then it's crossed to the downside. So this is looking to go short, but we haven't touched the outside of the Bollinger Band yet. So that would have been target one hit if your stop loss had been low enough. It'd probably been taken out in all honesty, and then nothing's happening. Basically, we're waiting for a touch of the outside of the Bollinger Band now on that time frame. So nothing's happening there. If you look at the DAX, I don't know if it's kept. Oh, it has kept on my numbers on. I put some lines on here earlier. We were having a look at this on the 5-minute this morning. This is traded really, really nicely this morning. So sideways here. There's our high of the market open. Market open was back here. We were long this, trading this up, came back against us quite aggressively. You can see what's chopping around. And so into just now, before the data's coming out in a couple of minutes, it would have gone long here, the cross of the D. We've touched on the outside of the Bollinger Band there. So we're waiting. Got in there, added here. This first target as we got to the midline. A few, there's only 5 or 6 points, but certainly added there on the big breach of this area. Added here as we've touched the outside of the Bollinger Band. So looking to go short now, aren't we? But we're still long. See, that's the point. We're still long because we've touched the outside. So we're moving up. We've had this expansion of the Bollinger Band. So we ride it. That's last Friday's close that blue line, and then we get out here, which was our high from this morning at 9 o'clock, and it's also as our K and our D line cross down. So now we're looking to go short. and indeed it would have gone short here, but we've got out at this high point here, would have been our target and the MACD. So we've gone short at this point. It's gone down initially. So we've got all of that, and now we are short here because we were outside the Bollinger Band. Our MACD have crossed here, and we've been short from this time here. So we moved down, but it's gone back against us, and our stop loss would probably still be up there a little bit because it's not moving. This is literally a 5-minute time frame. So we're short at the moment, having had a really good run on the DAX to the upside. Okay. So let's have a quick look at the data. That was the DAX moving up. It's moved down. So let's have a look if this data has dropped, which is right on time. Doesn't look like it. Let's have a quick refresh. Saying Nasdaq futures, US futures are just marginally ahead. So I've done the whole. Let's just do today. It always does this. So PCE is coming bang in line with expectations. The headline, the core PCE price index for March, 2.9%, 0.2 of 1%. So no change from positions there for everybody. PCE income is a little bit higher than expected at 0.4 from 0.3, so it's in line with where we were before. And personal spending 0.6 from 0.5, so it's more or less in line with expectations. As I say, it's not going to change anybody's position. The president is going to keep saying there's no inflation. Jay Powell is going to say, well, what data dependent? That's bang in line with expectations. Nothing of any surprise in there. It's just showing spending a bit stronger than expected, but it's 0.1, so it's like, I mean, it's only 0.1, but so core PCE 2.9%. So inflation closer to 3% than it is to 2%. It's not coming down, but it's it's not jumping up either. It's remaining sticky. If we look at the, it's only got on a monthly basis. I can't see on a. I'm going to show you the data. If we just look at the, the forex factor doesn't give you an annualized rate; it's just on the monthly basis. But you can see it's not going away. It's sort of sticky. It's hanging around. It's 0.2, 0.3%, and this is what the Fed's been sort of worried about. That it's still hanging around, but it's less than it was last month. But it's bang in line with expectations. Unfortunately, the forex factory didn't give me a graph of the annualized one like we've got here, and we don't get that from the investing.com Canada. So bang in line with expectations. Marginal moves one would expect. There's our short. Actually, we were short, weren't we, on that cross there? It's maybe crossing to go long again. But so we were we were short from here as we closed out. So we got out there. So out of the money at the moment, but it's back. I mean, we've made loads on that run up, haven't we? So anyway, let's have a look at what the dollar's doing. So we go back to the dollar crosses. And euro 116.74. So oops, I get rid of that. So initial spike higher for the euro to 116.86 as the data came out. It's been rising this morning. We were down to 116. That's 5 minutes. Sorry, my strategy was short this last night after a big sell-off yesterday, and we're sort of out the money, I think. And we'll look at yesterday's the daily on the euro. So a big down day on Wednesday. Big down day yesterday, breaching the 20-day. I took a short position last night on an end of day basis down about here, and we bounced a little bit today, as you can see that. So it's up a bit. If we look at as I say, go back to that 5-minute reaction to the data, it wanted to go higher, but it's been sold off immediately as the data's broke. So again, this one moved higher from here to here. Second target was hit there as we got to the outside of the Bollinger Band, and now it's looking to go short. That's gone against you. That's been stopped out. Once again, taking that ahead of this key day, very questionable. So that's looking like a short position should be, because we've crossed and crossed back again. So this is looking on this particular 5-minute time frame based on the data, looking to go take a short position on the close of this candle now. So that's gone short there. That's a strategy. Let's just so that 5-minute strategy would have gone short there, as on that cross there. It's we see how we go. The stop loss sort of again there, that's that high, so I'd split that difference, perhaps there, put the stop loss about there, based on price action through there. It's a bit high to start off with, so we'll see where we go. I'd like to see another break of this 20 if we're going to go down to test that low from 12 o'clock at 1661 to the downside. So we're short at 1674. Our stop loss around about 16. Let's call it 1680. Just round numbers around about there. 1680. So that's what that is trying to suggest. But we may obviously that all may this might provide support like we've seen here, and we're moving off higher again. But at the moment, that strategy post the news on the 5-minute time frame would have triggered a short position on the core PCE, coming in as expected at plus 2.9%. Inflation is still sticky. It's adding to the argument that the Fed have put forward. So negligible moves. I mean, it wasn't. So there we were. We were the data. We moved for it to 1686 to 1676. It was a very minor 15 pip move. So it's nothing like the strong data we had yesterday, but it's still showing the strength of the US consumer. And we're interested in seeing, as I said later on, what those consumer sentiment numbers are looking like. So 1671 looks like we might get stopped out on this one. Looks like we want to. It's just holding up in that overbought area there on that 5-minute time frame. But we'll come back to that in a minute. See where we are. Aussie 65.36 coming back today from a strong. A bit of a sell-off yesterday, strong dollar yesterday. So we've bounced in the last hour or two. 65.35. We put the low of the day at 65.20 so far today, but the trend still is to the downside over the last couple of days on the Aussie dollar. We can see the daily trend broke last week very significantly, and the dollar came back quite aggressively. So under the 20-day moving average. On Wednesday, down day again yesterday, strong dollar day yesterday, given that data, and now we're right. You can see this here on the hourly chart, daily chart. Sorry, a big pivot area at 65.30, and that's where we're pivoting currently. There's that big move down from the big move up to the upside for the Aussie. Sterling 133.70, so big crash down through 135 this week as well. That was last week. We're going back to test it Monday, Tuesday, but another move down Wednesday. Significant move down yesterday as well. So the euro, we took short. Sterling, we didn't. It hasn't. But perhaps looking as a turnaround point there. But if we look to the left, we've breached that low from the beginning of the month, beginning of September. So we plugged yesterday new lows for the month, and so that's been breached. And so the next level down would be that 132 level, which we talked about on the way up, didn't we? So see if this sort of balances out. I say many traders rolling their September contracts today, closing their September contracts today. But so a significant move up and a significant move down in the last couple of weeks for sterling against the dollar. So it was chopping. Volatility remains the name of the trend, but there's legs to be played here, so don't just have a system, follow your system. There's that cross touch of the outside of the Bollinger Band was earlier down here, looking to go short. In fact, you would have been short there, wouldn't you? And that stopped out, so we got another short position there, and then that one was confirmation. So you'd either taken it on that day, right on the cross, you'd here at 36.25, and then added on that day as it's confirmed moved, or even added on that day that's broken under the 20-day, but that's your first target, isn't it? So target 1, target 2 has been hit. So that turn has worked to the downside. It's clear move there with the last stochastics and MACD system now on an end of day basis. So sterling 133.60 at the moment, below a key support level at the moment. The yen 149.70, strong week for dollar against the yen. We've breached that 149 area. 149.80 was our close yesterday. So immediately we look to the left and you see our next level takes us above the hugely psychological 150. Whether we get to that today on the back of obviously that PCE data is in line with expectations. So whether we get to that or not, one would be questionable after 2 strong days, but you'll see. But 150, next big line in the sand for dollar yen. As you can see, it's a key pivot area. Turning point here, 150. Well, that one's at 160. That's 149.70. But you see the 150 area right through there. Let me just put that line on. Probably won't stay on, but it's a key area. Big old round number 150 for dollar yen traders. There we are, and banging into it. In this rally up, see that's very much sideways action. It looks like it's breaking out. Looks like a bit of action maybe coming in here. Breach of this, and there's a lot of fresh air up here. Breach of the 150 takes us to 151, but again that was sold off quite aggressively back in the spring after a big move down from a stronger dollar, which took us all the way to 158 plus, didn't we? We were all talking about 160, but we then plummeted to the beginning of the spring under 140 itself. We've recovered since then, but a lot of sideways action for August and most of the summer. Dollar yen, Bank of Japan still tied up about trying to raise rates. It's not happening. So dollars are picking up on expectations that perhaps the Fed aren't going to be as aggressive with their rate cuts as expected. So I can't imagine the PCE, the CME numbers moving quite a lot, but we're now quarter of an hour. We should have had an update on this free service. So PCE numbers today. So we're back to 87.7. Is that updated from where was that? That's 7:30 CT, 7:30. So it's just after the data's come out. So that might move down again. So a week ago we were at 91 plus, weren't we? 95. Early part of this week. Yesterday, we went down to 85% of another 25 basis point cut at the October meeting. It's 87.7 now following the that data, but again that'll move because it's only updated a minute after the data came out. So we'll see how that changes later on. December meeting. Now 63% chance, 63.3% chance of another 50 basis point, and a third of no change, 25 basis point cut December. So 66% chance of the second rate cut happening by December. Currently, so we'll come back to that in a wee while. So dollars relatively unscathed on that, in line with expectations. PCE number. Dollar CAD's had a good week from the break of the 20-day there on Monday, Tuesday, Wednesday, Thursday, Friday, consecutive 5 days to the upside. We haven't seen that for a while. For dollar CAD traders, there's 1, 2, 3, 4, 5. Last time we had that, I was back in the beginning of the month, and we're ending the month in a similar uptick. So it's a combination again of a bit more buying for the dollar. That's certainly weakness for the Canadian dollar we've seen as well. But there's that turn. We didn't. In fact, this strategy wouldn't have triggered because it hasn't touched the outside of the Bollinger Band. The last Bollinger Band touch for this on an end of day basis, all back here on the 22nd of August. That's how much sideways action there's been. This one now is looking at, it's gone a bit overbought. So it's touched the outside of the Bollinger Band, and we're now waiting for the stochastics to cross. So there may be some more momentum to the upside. It's broken that August high yesterday, and I can say it's a good day yesterday for the dollar across the board. 138.40 now here, and there's the congestion area we're running into. So 139.70 seems to be the top for this, from this area here back in May. So we may go to test that. So there's still some legs in that, still another 20 odd points in that potentially. See how, big, multiple days here. 1, 2, 3, 4, 5, 6, 7, 8, 9-day cluster here during the second week of May. So are we going to see another high here? We just put in a new high here in 1st of August, another high there, the 22nd of August, and here the 25th of September, another high as this Bollinger Band starts to move up. So the sideways action sort of blown out, but are we going to stall at this key level here? Well, say this strategy is now waiting to go short, having been, in fact, no, it hasn't. I say it was looking to go short there, and it's gone short there, and it's rallied down, didn't get to the second target, didn't get to the outside of the Bollinger Band, and it's crossed there. So you got out here. Again, these might have been a bit different back then at the beginning of the month when it moved down. So it may have, Bollinger Band may have been there then, who knows, but it looks, you can see it hasn't actually touched, didn't touch there again. So that long would have been just a break of the 20-day moving average. Many would have used that. And dollar yen going to the upside. Sorry, dollar CAD I'm talking about, not dollar yen. Sterling, euro we've done. Swissy under .80 again, or back to dot. I'll try and get back to .80, but dollar, improved a wee bit here in the summer, but it's continued to weaken, and the no change from the Swiss National Bank this week has pressured the Swissy a little bit, and again another 2 good day run for the dollar here. So back over the mid line there, and again that one looking to go long. Well, it's been looking to go long here. Touch further down. There's the last move long there, and so you might have got in at that point there on the 19th, or perhaps the day before. If you caught that at the end of the day, we've moved up to target 1, target 2 being all the way up here. You can see the resistance through this zone here at .8050, a pivot area. So we're still, again, as I say, another 50 pips. Pivot area, resistance area, and top of the Bollinger Band. So target zone still 50 odd points away to the upside for dollar Swiss using this strategy. Elsewhere, gold 3750. Consolidation at highs. As I say, we went within a smidge of 3,800 on Monday. Not Monday, Tuesday it was, wasn't it? Wednesday was a down day. Thursday we bounced a wee bit, and Friday we're up. Today we're up a bit. So the significant break that we saw on Monday of the 3,700 has held. We're consolidating at highs again. That inflation reading won't have changed any of the bullish gold traders. That what looked like a rejection of last week, a rejection of the 3,700 area, looked like we were moving down in the lower time frames, didn't we? I remember we talked about that last week. That's been bought back quite significantly, engulfing candle here on Friday, and then follow through buying on Monday took us through the 3,700 on an end of day basis for the first time ever, and new all-time highs on Tuesday at 3,791. So just a few dollars shy of 3,800 this week. So gold remains very much bid, my friends. Be careful trying to catch the top on that one or trying to short that. We have consolidation at highs, just as we had here back at the first week of September. The last week of September is also consolidating at high. So gold is still very much in demand for all sorts of reasons. from central banks to governments to geopolitical uncertainty. Crypto, Bitcoin's had a bad week, 109,300 at the moment. Sorry, daily. There we are. Daily. It is the daily. Down through the 20-day moving average on Monday, and we moved down again yesterday. Big down day yesterday. So our 112,000 key pivot area we've been talking about for most of the summer was breached again significantly yesterday. We went all the way down to where we are now, basically 109,200, and as you can see here. From the beginning of the month, 107,300 was tested, and that might be the next downside level of support for Bitcoin. So again, another one touching the outside of the Bollinger Band here. We'd already crossed. In fact, we hadn't, had we? The negative cross was here, so we'd gone short here. Stop loss might probably have kept us in that, so we've been short that. There's target 1 was hit there on Monday, and target 2 has been hit yesterday, so we're out of that short position now. If you've been trading this on an end of day basis using this strategy, it is now looking for a potential long position down here, but we may have to test this 108,000 107,500 zone first before we start to see some buyers coming back in there. You see how key potentially that 107 area is as well. Key support area here for Bitcoin. So watch that over the weekend. Remember, you can trade this asset, crypto, over the weekend, but be careful. Obviously, volumes are much, much lower over the weekend, my friends. So best of luck with that one. So watching that one over the weekend indeed for some buys, potential buy on this strategy for crypto. Bitcoin crypto leader. Energy. We haven't talked about oil very much, but so sideways action. We got some lift this week for both the oil markets, but still that sideways action. You can see here we've had for most of September. I can get too excited about it, but clearly top of the Bollinger Band at 65.50 zone, 65.30 there. And the bottom at 62 or 62.25, 62, the flat bottom. So buying at the bottom, selling at the top. Tuesday's move back over the 20-day moving average is enough to trigger a long position that's moved up, and I got out at 65 yesterday. So it's still up to the upside, but it's just channel bound. So I might see what happens going into the weekend. We've got a bit of expansion on the Bollinger Bands, so we could go either way. We either break above where we are now, 65.60, and press on to the upside. Stochastic here is still rising, so that's looking relatively positive. We've got an expansion of the Bollinger Bands. We've got a little bit of a squeeze. It's not a major one. See that little squeeze there on Monday when we went down. See the top coming in, the bottom coming up a little bit. It's not a massive one. It's not like this one. This is a clear squeeze, and then bang, we got down. So we'll see where we go from here. We could break out to the upside, and then as you can see, that 70 is hugely significant again for WTI. Take us back to the beginning of August level at 70, but still quite a step away from this range we've been in for most of the summer. Obviously, we are getting into the end of the quarter as well, the end of the month. We're moving into October, the winter time, autumn in full swing now. So we could see this starting to rise through there, but watch that one. So it's mildly positive. Brent's the same, the global benchmark, 3-day rally. And again, sort of breaking it, much more of a breaking out of its range a bit more than US oil or WTI over 68.80. So that remains long on a commodity trading strategy I have from Tuesday. The two oil complexes. So indices are relatively flat at the moment. That sticky, it didn't get to 3%, did it? But 2.9% is much, much closer, obviously, to 3% than it is to 2%. This number here, bang in line with expectations. So little excitement. Whether the inflate the University of Michigan will shake things up much later, I'm not sure. Barkin's already had a comment this morning, sort of questioning the ability of the consumer to cope with any more costs. So that could be reflected in the consumer expectations. 51.8 from 55.9 is expected this afternoon. If we I just look at the this number here, so 55.5 consumer sentiment. If we look at this, how it has dropped here. During the spring, bounced back bounced back during the summer, but we'll see what it looks like later on. Has it come back? So this is the real softening of the soft data. The hard data hasn't followed this decline, so the soft data started to pick back up again. So I'll be interested to see what this feels like at the moment. The follow through tariffs hasn't happened, hence the president continues saying about the the lack of inflation, and therefore, the Fed should be cutting rates now and cutting rates aggressively. So, but that hasn't happened. So let me just leave you with gold continuing sideways. There's the daily, so no worries there. If you're an end of day gold trader, if you're a 4-hour gold trader, you're still relatively long. Looks like that was, but that's gone sideways, hasn't it? We're not. Nothing on that. There we go. From that breakdown on Wednesday afternoon, we've got a floor there for you 4-hour 3,732, a top of 3,762. So sideways action on the 4-hour on you for you gold traders. The hourly a bit weaker, but again sideways action. See, it's just obviously spread out. And not one I'm interested in trading on a short-term basis, although that would have been short there. We've touched there. So again, that would have worked out using this strategy. So it's touched the outside of the Bollinger Band there. We've had the cross of the stochastics here at this point here. And we've gone short there. Target 1's there. Target 2's there. That's a nice straight move down. We then touch the outside, so now we're looking to go long. This would have gone long there. What's that? That's there. That's long. In fact, where's that? Yeah, that's crossed. It's touched there. Then we gone long there. So it's gone long there. It's already target. So we'd have left that probably. I wouldn't have had target 1 at the target 1 would have been there. It hasn't happened, and then we've crossed back down. So sorry, see we crossed back down there. So out on that one. So absolutely flat. So I've got in there, it's gone up, it's come back down, I'm out now, and nothing's happening now. We just, but looks like we maybe, there we are. It's just touched the outside of the Bollinger Band. So I'm looking for a cross now. I'm waiting here for the gold hourly time frame. So 2 minutes this finishes. It's touched. You can see we've touched the outside of the body. It's a weak one because it's top of the wick, but I'm waiting for this to now cross. So I'll have to wait a bit more. But that was a successful one. That was flat. So that was, when was that? That was the 25th from 12 till 4, that yesterday afternoon, or 25th afternoon. Was that yesterday afternoon? Yeah, yesterday afternoon was successful. That one was, that was 1 o'clock this morning, so I wouldn't have been thinking that. That was 6 o'clock last night, so I might have left that. Yeah. Anyway, that's out, and that's looking like we may be looking to go short gold, but it's very sideways. So careful how much you're risking on that one. Okay, so that's really the main data. Say we still got this Michigan data to come. Another speech by Mickey Bowman. She's Michelle Bowman, the one of the key hawks on the Fed looking for 50 basis point herself. She was a while ago. She didn't actually vote for a bigger cut this time. She stuck with the rest of her colleagues and didn't join Mr. Myron. So any vague chance she was of being on the shortlist for the Fed chair has disappeared on that. But she's got she's got a big enough job anyway. She's deputy chair of regulation herself. So she's got something to say later on this afternoon after the Michigan data. Next week, obviously, we've got the end of the month to so a bit of volatility potentially Monday, Tuesday, and then the start of the new month, October. Let me just put in the main events. Just put in the main events on all the categories. So 2 categories. Put in 2 as we look forward to the week because we go through this on a daily basis. Anyway, Monday's a bit busier than normal. Some inflation data coming out of the US. Lots of out of Spain. More Fed speak. Williams and Bostic on Monday. I'll be live on Monday. I'm moving the office on Monday, so I'll be in a smaller office on Monday. I'm going visiting, so I'm using somebody's spare room next week. So bear with me. The lights won't be perhaps as good. Same camera, different microphone. So we'll be live for the opening trades, European trades on Monday the 29th. Obviously, we've got the month end to contend with. I say Monday, Tuesday. We got the RBA decision overnight on Tuesday. No change expected. 3.6% is where they sit in Australia at the moment. GDP reading from the UK. Are we going to get any moribund growth, or what the Chancellor and the Prime Minister are looking for desperately here in the UK? Is expected to slip next on Tuesday, so that hits. German unemployment data on Tuesday as well. Chicago PMIs highlight interestingly for Tuesday. Wednesday, we start the new month. It's National Day in China, Hong Kong, Taiwan. Markets will be closed. The PMI monthly data starts to roll out from Wednesday as well, but manufacturing remaining in the doldrums like we saw this week as well. So watch that. OPEC start their meeting as well on Tuesday. That's Wednesday. Let's see what that looks like. Non-farm payroll, ADP, 55,000 is expected on Wednesday. Weekly claims on Thursday will be as good as they were this week, 219,000. Big surprise. And the ongoing down at 1.926 million on Thursday. That's the main data for Thursday. I say it's long. It's a week. It's holiday in China. And then Friday, the 3rd of October, it's non-farm payroll again. 39,000, 40,000 from that 22 we saw. So the clamp down on migration is having an impact. Let's have a look at what the non-farm payroll data looks like. Is earnings holding up? What is this participation rate looking like? And this wider U6, the U6 unemployment rate last time, remember, we went over 8%. So that's the one that always attracts my attention. Full employment, really, 4.3%. Is that going to tick up? But we'll see on that. So big day Friday. PMIs as well after that. Speech from government Bailey. So the new quarter, the new month, off to a flying start next week. ADP on Wednesday, non-farm payroll Friday. Join me for all of the fun and games of that. Leading with some inflation data and some PMI data as well, as it's the first week of the month. The Central Bank of Australia as well. So plenty to get your teeth into, my friends. Join us for that. If you're not a client of ours already, why not? Our evaluation phases are very, very straightforward. We pride ourselves on being as simple and as transparent as possible. There's no sticky, naughty rules. that suddenly pop up in the small print. It's very straightforward. Our express challenges are getting more and more popular. It's the one-step rule. You need to make 12% to get to your funded account and not losing more than 4% on a daily basis or 7% overall of your account. The meaty accounts at 50 and 25,000, $50,000 account. One step is $345. If you're new to the prop trade, we can offer you a 25% discount, a one-off. This is say for your first account, gets you a huge $86, $87 discount. So $250 or less than $260 gives you a huge 50,000 equity account. Obviously, it's, as I say, it's simulated account, it's paper trading if you like, but treat it carefully. Make 12% over a. There's no rush. Lots of people rush into this, try and do it straight away. It's minimum 3 days. Take as long as you want. 12% return, very, very doable. There we go. Challenge duration 1,000 days. There is a time limit. I didn't realize something must have changed that, but there we go. Beauty of the Express Challenge for some people is you can trade the news. So trade the weekend anyway. That's your crypto trading, but news trading is allowed with the Express Challenge. Past this, give us your explain who you are. So we need some KYC and know your customer. So proof of identity, proof of address, and 80% of your winnings in your funded account can be yours. So you've got a 50%, $50,000 challenge account. Your funded account is $50,000 as well. Any money you make, 80% of it is available for you to withdraw, and we pay religiously on Fridays. You put your claim in by midnight GMT on Thursday, and you'll get your earnings in real terms, in real crypto terms, the following day. So today's payday. Today's Friday. Today's payday. Lots of guys getting paid today. Lots of girls getting paid today as well. If we look over at our success stories, some people, not a lot of people do it, but a lot of people do it. I'm saying not a lot of people do, but people like to post their certificates. Not everybody does it. So there we go. $101, $106 Irish. Might not seem a lot, but as the Irish says there, this is the 7th payment he's had from us. So as I commented here, this is Mage Stewart 7. Next week, hopefully, it'll be his 8th payment. And here, look at his comment here. I hope you can see that, guys. He's already up, or I'm saying he's a he. Looks like he's a he, doesn't it? He's already up 5.8%, and now he's just wanting to relax and wait for next Thursday to come round. So, and that, as I commented here, is what a lot of traders can't do. People think, that's not trading, but relaxing and waiting, patience and discipline are what keep people in business for the long term. So, that's what it's all about, my friend. And I responded to that. So the best of luck, everyone. We're here to help you. Any comments, we appreciate them. These are 10,000. He's going to do a $5,000 account. Pavadav has a $10,000 account. As I say, that's what they can afford to do. If you've got a few $100s, 50,000. It's really, really nice. At 25,000 is pretty hefty as well. So that's only $130 with your 25% discount. It's still a very hefty equity to be playing with, and trade in a disciplined manner. Have a strategy, whether it's this strategy here or whatever strategy it is, but stick to it. Follow the rules, and money can be yours, my friends. So have a great weekend, everyone. Stay safe. Thanks for watching. I'll see you all live 7:30 7:30 London time, 6:30 GMT, Universal Standard Time. We'll be trading the Open. My favorite index for trading the European Open is the DAX, and as we saw, we've been successful with the DAX this morning again, this afternoon. Backspace, where's the DAX? Here it is. These are the DAX. 23,700 at the moment. So that was our 5-minute time frame is my preferred time frame. So there's our target. As I say, it looked like we were going to go short, didn't we, here? But it's continued to move up. It's pushed out again. So it's looking to go short. That would have gone short there. So that's triggered short now here on there. You can see what's happened. We've crossed to go. We crossed to get out, and it's pushed even higher. But we'd have got out. In fact, why have we got out here? Oh, that because that was the target area, wasn't it? I was saying that was my target area up here, but it's gone higher, and so technically, you could have held it till that one. I mean, it's a few points I'm talking about. Then gone higher and pushed to the outside the Bollinger Band again. So we're looking to go short. So there's the cross there. So this strategy now, if you're continuing to trade this like this into the US Open, is short. Not that one. It was short 5 minutes earlier. Because there, you see we've crossed down significantly. The blue has crossed down from above to below the orange. And we'd have got short there. So we've been short from here, this strategy now. Anyway, if you want some more details on how to trade, it's very, very straightforward. And you can use the ATR sometimes to give a target. So there's 18. So twice 18 is 36 points you'd be looking for from there. So we were looking for 680, and that would have been, first target is that just round about there at that midpoint of the Bollinger Band. So we've been successful long here, and now we're looking to go short from just about 10 minutes ago. 30. But anyway, so we'll be trading this live on into the Open on Monday. So have a great weekend, everyone. Stay safe. Got any questions, stick it on our Discord group. We're here to help. And I say, may the pips be with you as ever. Take care, everyone. Great weekend.